Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the US dollar and the most important event of the week, the non-farm payrolls and the opportunities its publication will present. My name is Sasha and I'm a financial analyst from the research department at Fortrade. I'm delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. And now let me explain what a market opportunity is, if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on market opportunities or not. So here's an example of a recent market opportunity. Here you can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top you can see some geopolitical events and fundamental analysis that influence the euro-US dollar currency pair. For example, the part on the EU and its disagreement with the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's how you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further along. At these points you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect these kind of profits at the support levels in green. If the price is going against you, then you could potentially have a loss of this amount at these resistance levels marked in red. Finally, profit and loss calculations are based on a one-lot trading volume. The non-farm payrolls report is the release of data on US jobs growth over the previous month, published by the Bureau of Labor Statistics, usually on the first Friday of the month. It's the most eagerly awaited monthly data by world markets. Morning trading volumes are usually slim in European markets on the day of the release, as they await the afternoon release time. The headline number in the report gives the number of jobs that the US economy has gained or lost over the previous month. A more important number for the markets, however, is the difference between the actual change and the consensus of estimates by analysts and economists published in advance. The market reaction will depend on whether the published figure is above or below the consensus and by how much. Over the past 2 years, non-farm payroll data has been very positive. Last month's figures were worse than expectations, as I will explain in a moment. As you can see, the unemployment rate has significantly improved in recent years. The unemployment rate approached 8.5% during the financial crisis, but has fallen ever since. The unemployment rate has recently fallen to 3.7%, close to its lowest level since 1969. Average hourly earnings is important since an increase in the figures indicates a possible rise in inflation and in the value of the dollar, while a decrease in AHE tends to push the dollar down. Month on month, average hourly earnings was 0.4% in August. So the NFP release comes together with the unemployment rate indicator on the first Friday of every month. When this is due, the trading week is a range-bound one for the forex market, and after the release, traders start positioning for the next time the Fed meets. to see how monetary policy changes in the meantime and how to react. When the actual number differs from the forecasted one, the market travels. Usually traders take positions for the NFP in advance by looking for clues from other economic data, like the ADP jobs report or private payrolls. The unemployment rate is part of the Fed's decision-making process to move on interest rates. Generally, a lower unemployment rate is better for the economy, as jobs are created, and this could result in the Fed hiking rates. Higher rates lead to a higher dollar. Forex trading is about anticipating what the central bank is going to do with interest rates at the next meeting, and the NFP is the perfect economic release to position on the right side of the market. The non-farm payrolls released on September the 6th, 2019 showed that the US economy created 130,000 new jobs in August, lower than the expected 160,000. The jobless rate remained at 3.7%, as expected. Following the publication of the release on September the 6th, the dollar fell by 0.11% by the end of trading, as you can see on this table. Since the NFP was slightly worse than expected, this confirmed the widespread belief among investors that the Fed would reduce interest rates. As we now know, this belief was correct. As you can see, this pushed the dollar slightly downwards, although not by much, since a rate cut was already baked into the price. As far as the euro-dollar is concerned, the currency pair grew higher by some 0.17% by the end of the day. The euro has been under pressure in recent months, with the eurozone economy continuing to underperform, and speculation had already begun about a potential ECB cut in interest rates. Thus, it's no surprise that the euro-dollar saw a slightly sharper drop. In fact, the euro-dollar has continued to fall and is now at a 2-year low. The thing to keep in mind is that the dollar is often volatile on the day of the NFP, but that the NFP can also represent a good trading opportunity. So what can we expect from this week's report? Economists expect that the NFP will record that 145,000 new jobs were created in September, and that the unemployment rate will remain at 3.7%. Traders would also be advised to keep an eye on the average hourly earnings figures. If they are above expectations, it may push the dollar higher. Average hourly earnings are considered a sign that inflation will rise. Average hourly earnings are expected to fall by 0.1% to 0.3%. If earnings are higher than expected, it may dampen expectations that there will be a number of interest rate cuts this year, pushing the dollar higher. The talk among investors now is of the likelihood of a further rate cut this year. Fed officials have played down the possibility for rate cuts in the immediate future, and data from the US has mostly been positive, while inflation remains at expected levels. President Trump is still constantly applying pressure for lower rates, but Fed members have managed to maintain their independence and moved according to the data rather than due to political interference. In any case, it's certain that reports like the NFP can have a major influence on the greenback and the financial markets. Of course, we at 4Trade will be following any developments that affect the markets very closely, so please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that the NFP will present. Until next time, goodbye, and please join us at 4Trade again soon.